Good morning, everyone, and welcome. Today, we're diving into an important topic for anyone interested in home financing, understanding FHA and conventional loans. We'll explore a comprehensive comparison that covers eligibility criteria, the benefits of each loan type, and the specific mortgage requirements involved. I'm excited to guide you through this to help you make informed decisions when it comes to your home loan options. When comparing FHA and conventional loans, one of the main differences lies in the down payment and credit requirements. FHA loans are more accessible in this regard, allowing for a down payment as low as 3.5%, which can be a big help for buyers who might not have a large sum saved up. They also accept lower credit scores, making it easier for those with less than perfect credit to qualify. On the other hand, conventional loans usually require at least 5% down and have stricter credit score standards. Another important difference is how mortgage insurance works and the loan limits. FHA loans require both an upfront mortgage insurance premium and ongoing monthly premiums, which is something borrowers need to budget for. Conventional loans might require private mortgage insurance or PMI, but this can be canceled once you reach a certain equity threshold, offering more flexibility over time. Additionally, FHA loans have set loan limits that vary depending on the property's location, while conventional loans often allow for higher loan amounts, including jumbo loans for more expensive properties. These factors are crucial depending on the buyer's financial situation and goals. Now, let's talk about the advantages of FHA loans. First, one of the biggest benefits is the lower down payment requirement. Borrowers can put down as little as 3.5%, which makes it much easier for those with limited savings to finally qualify for a home loan. Next, FHA loans offer more flexible credit requirements. They accept lower credit scores compared to conventional loans, which means people with past credit challenges still have a good chance of securing financing. The approval process is also simpler and more streamlined. This means it's faster and less complicated to get approved, increasing accessibility to home loans for many borrowers. Another interesting feature is that FHA loans are assumable. This means if you sell your home, the buyer can take over your existing FHA loan, which can be a real advantage in certain market conditions. Finally, sellers can contribute up to 6% of the purchase price toward closing costs under an FHA loan. This helps reduce the amount of money buyers need to bring to the closing table, making it even more affordable. These benefits really make FHA loans a strong option for many home buyers. One major advantage of conventional loans is that they don't require upfront mortgage insurance premiums, unlike FHA loans. This can save you a significant amount of money at the start. Additionally, if you have a good credit score, you're likely to pay less over the life of the loan, making conventional loans more cost-effective in the long run. Another benefit is the variety of loan options available. Whether you prefer fixed rate, adjustable rate, conforming, or jumbo loans, conventional loans offer flexibility to match different needs. Plus, private mortgage insurance, or PMI, can usually be canceled once you've built enough equity in your home, which means lower monthly payments over time. Conventional loans also allow for higher loan limits, including jumbo loans that go beyond FHA limits, making them suitable for more expensive properties. Lastly, these loans come with less restrictive property requirements, so they accept a wider range of property types and conditions, giving borrowers more choices when selecting a home. When we look at credit scores and down payment requirements, FHA loans are a bit more flexible. They accept credit scores as low as around 580, whereas conventional loans typically require a score of 620 or higher. On the down payment side, FHA loans require a minimum of 3.5%, while conventional loans usually ask for at least 5%. Moving on to property standards and loan limits, FHA loans have stricter rules. Properties must meet HUD's safety and quality guidelines, ensuring the home is in good condition. Conventional loans, on the other hand, have more lenient appraisal standards. Regarding loan limits, FHA sets regional maximums that are often lower than those for conventional loans, which sometimes include jumbo loan options for higher amounts. This can impact the size of the loan you might qualify for depending on which loan type you choose. Here we have a summary comparing FHA loans with conventional loans, highlighting some key differences to help you decide which might be better for your situation. First off, FHA loans require a lower down payment, just 3.5%, making them accessible for many first-time buyers or those with limited savings. Conventional loans, on the other hand, typically ask for 5% to 20%, depending on your financial profile. When it comes to credit scores, FHA loans are more flexible, accepting scores as low as 500 to 580. Conventional loans usually require a healthier credit score of 620 or higher. Mortgage insurance works differently too. FHA loans require both an upfront premium and monthly mortgage insurance premiums, while conventional loans may require private mortgage insurance only if your down payment is less than 20%, which you can cancel once you've built enough equity. Interest rates on FHA loans are generally lower because they're government-backed, but conventional loans can offer very competitive rates, especially if you have strong credit. Property standards are stricter for FHA loans, as the home must meet HUD requirements. Conventional loans have less rigid standards, which can be helpful if property is unique or older. Seller contributions towards closing costs can be higher with FHA loans, up to 6%, compared to 3% for conventional loans. Loan limits vary as well. FHA limits depend on the county, while conventional loans have both conforming and jumbo limits based on broader market guidelines. Overall, FHA loans are often best for first-time buyers or those with lower credit scores, whereas conventional loans suit buyers with stronger credit and the ability to make a larger down payment. Understanding these differences can guide you in choosing the right loan for your needs.